taking all kinds of steps to do likewise. So in the last 12 months, the share of bank deposits in Hong Kong that are denominated in renminbi and not in Hong Kong dollars has quadrupled. A year ago, basically no Chinese companies did their export trade, their cross-border settlements, using Chinese renminbi. Now 70,000 of them do. So Hong Kong is, and much of that trade goes through Hong Kong. So Hong Kong is the petri dish that Chinese officials are using to cultivate and test out this new market, and they are moving very quickly in doing so. McDonald's has issued renminbi-denominated bonds, dim sum bonds, in order to fund its investment in new outlets in China. Caterpillar has issued dim sum bonds in order to finance its trade and work in China. So I think the renminbi is coming, and it's coming more quickly than many people suspect. So my conclusion then is that the dollar, the euro, and the renminbi all have their problems, but the very fact that there are doubts about all three of them is a reason to think that there will be a place for all of them on the international stage. So I've given you a bunch of reasons, or a bunch of arguments, which I hope are compelling, for why a global monetary and financial system organized around multiple international currencies is coming. And the question is, should we worry? I've told you that I think this transition will involve a weakening of the dollar relative to other currencies, and modest negative impact on American living standards. Remember that equivalent to 1 year of economic growth number that I gave you before was the worst case scenario where we mismanage our financial affairs and there's mass migration away from the dollar. If we manage our financial affairs well, and 10 years from now, the dollar is one of 3 international currencies, but still first among equals because of the advantages of incumbency. In that kind of situation, then any negative impact on your pocketbooks would be less. In addition, there are worries that a multiple international currency system of the sort I've described could be dangerously unstable, with dollars and euros and eventually Chinese renminbi all trading in liquid markets and all being substitutes for one another. Their exchange rates could become dangerously volatile. The argument here is that if there were even limited problems or even limited suspicions of problems about whether the U.S. would balance its budget or whether or not there would be a big hedge fund or investment bank that would create counterparty risk, in that kind of situation where there were good alternatives to the dollar, other currencies that were traded in deep and liquid markets, everyone would scramble out of the problem currency, its exchange rate would collapse, there would be all kinds of volatility. Central banks, which would be holding big, diversified portfolios of all these currencies, would in particular want to protect their positions by scrambling out of the problem currency that would aggravate the financial difficulties of the problem country, and it would create financial difficulties for the other countries, other countries issuing international currencies as well. They would see their exchange rates appreciate sharply. Their exports would get crunched. So that's the worry, even more volatile foreign exchange markets than we have now. This worry, in my view, is based on a mischaracterization of what central bank reserve managers, the big new players, do. The individuals who manage the foreign currency portfolios of central banks don't act like hedge fund managers. They don't seek to maximize returns to their principals in the manner of hedge fund managers. They have social responsibilities, and they know it. They're not compensated on a 2 and 20 basis. They don't have the high-powered financial incentives to maximize returns that hedge fund managers do. They have less incentive to follow the herd, to sell a currency simply because everybody else is selling. They can adopt a longer horizon than private investors. Unlike private fund managers, they don't have to satisfy impatient investors, or at least equally impatient investors. They don't have to exceed their previous high water mark in order to draw a paycheck. Private investors often find it hard to act as contrarians. When everybody else is selling a currency and you decide you want to buy it, you have to fund that operation. You have to borrow the money to buy the currency, or you can't allocate those funds to something else. When your principals, your investors, don't see a return on that investment, they can grow very impatient. So it's hard to act as a contrarian for a long period of time. I think central bank reserve managers with those longer horizons, with their guaranteed funding, are in a better position to act as contrarians, or, if you will, stabilizing speculators who push back against the herd. They can buy an asset, they can afford to buy an asset whose price has been beaten down in a fire sale instead of simply following the herd. So there is some empirical work on this at the Peterson Institute of International Economics by Ted Truman that I think pretty convincingly shows that central bank reserve managers do act as contrarians. If you want a concrete example, central banks bought more than $100 billion worth of dollar bonds in the third quarter of last year. That's the latest quarter for which we have data at the moment, responding precisely to a weaker dollar exchange rate. They saw that as a buying opportunity. So I'm not that alarmed about the specter of increased volatility in this new, more multipolar monetary world. Clearly, policymakers can do other things to limit the volatility in international financial markets. Sound and stable policies, sound and stable monetary and fiscal policies are so obviously important that it's tempting to leave the point unsaid. I think what would not help would be futile efforts to stabilize exchange rates between the dollar, the euro, and China's currency. Economic conditions and therefore appropriate monetary conditions. Appropriate monetary policies will continue to differ between the U.S., Europe, and China. So I think the idea that the U.S., the euro area, and China would be prepared to subordinate domestic policy objectives to the defense of target zones between their respective currencies is unrealistic. I think any attempt to put such zones in place would quickly become undone. We not only owe the phrase exorbitant privilege to the French, but we owe the idea of target zones between currencies, the idea that a more stable global economy requires stable exchange rates to the French. This has been their hobby horse as well for about 50 years. I found it alarming to learn that the French, as of January 1st, assumed the presidency of the Group of 20, this new group of 20 advanced and emerging markets that is the de facto steering committee for the global economy, because the first thing Mr. Sarkozy said was international monetary reform and stabilizing exchange rates will be the centerpiece of his agenda for the G20 for 2011. In the last couple of weeks, he's changed his tune. He's said things more along the lines, maybe target zones are not such a good idea. What we need instead is to think about how to manage a multiple international currency world. In my view, that's progress. So let me conclude. We economists are used to acting as messengers of doom and gloom. So it's unusual for me to end on a happy note. But if you buy my argument, you should see our current international difficulties as a reflection of the fact that we have an imbalance between our increasingly multipolar international economy and our still dollar-dominated international monetary and financial system. The good news is that this is a problem that should solve itself given sufficient time, where sufficient time, in my view, means something on the order of 10 years. The bad news is that 10 years is a very long period in finance. History also teaches us that financial crises happen on average every 3 years, financial crises of one form or another. So 10 years is a rather long transition period. If we manage to navigate it, I think we will have a more multipolar international monetary system to complement our more multipolar world economy, and that will be a good thing. So thank you for your patience. I'm happy to take questions.
Thank you, Professor. I'm sure we have no questions from the audience after that wonderful speech. For those of you who are new here, just please, if you have a microphone, we have 2 microphones on both sides. You can ask a question. If you don't, please don't stand up and ask, because we're recording this. Also, we ask you not to give long statements or ask more than one question. So just raise your hand. We'll try and get a microphone to you. I'll start over here.
How would the multipolar system affect South America, particularly countries like Argentina?
So the question was, what would be the implications for other regions? You mentioned Latin America, but one could well think about the Middle East. Africa is, at the moment, the fastest growing region in the world. You may have noticed. So there are lots of other parts of the world who that will be players in the new, more multipolar economy. If you look back at history, actually, you find that we have been here before, as is often the case in financial history. Before 1913, there were 3 international currencies: the dollar, the pound sterling, the French franc, and the German mark. Their domains were geographic. You know, Britain, it was the Commonwealth and Empire. But for Germany, it was Eastern and Southeastern Europe. I think the most likely case here is that Latin America, which is close to the United States, trades heavily with the U.S., would continue to do a lot of its international financial business in dollars. The counter to that is, China is coming fast in terms of its economic relations with Latin America, so they would probably end up using all 3 of these currencies to an extent. Let me say one more thing about Latin America, which is that if you buy my argument that once upon a time there was room for only one true global currency, but now we can have 3, a response to that would be, why only 3? Why not 4 or 5 or another similar number? If I speculate about what might happen in 20 years rather than 10, I can imagine 5 global currencies where the 2 additional ones to add to the list would be the Indian rupee and the Brazilian real. India and Brazil are fast-growing economies. They, unlike most of the rest of us, have favorable demographics. So with growing populations and labor forces, they're going to be growing even more rapidly. And they have pretty well-regulated financial markets already. They have lots of homework to do as well. But I think Brazil could be a player on this stage also. That's a longer-run answer to your question about where Argentina would look.
To what extent is the printing of currency as opposed to trade credits an important business for the federal government, and how does it compare in size to what we've been talking about? All around the world, people have $100 bills, for example, and that's got to be a profitable business for the U.S. government.
So that's what the dollar